It's Thursday, the 26th of November 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. The Australian economy gets a tick of approval from Moody's ratings agency as the dollar, commodity prices and share market all surge. That's our main story. Plus, the walls come tumbling down at borders across the nation. Finally, some positive remarks between Beijing and Canberra, and the retailers who don't talk enough about modern slavery. Global ratings agency Moody's said Australia will not be permanently weakened by the COVID-19 pandemic, and despite the record economic contraction during the June quarter, Australia was unlikely to face a lasting drop in potential growth or reduction in fiscal strength over the longer term. The comments suggest that Australia could remain one of the few AAA-rated nations by the end of the pandemic. The ratings agency report came as data from the Commonwealth Bank showed that household income growth had not slowed since JobKeeper and JobSeeker payments were reduced at the beginning of last month. The so-called fiscal cliff hasn't eventuated yet. During October, the average savings balance at the bank was up 15% on a year earlier. The bank said it was a sign that the jobs market was steadily improving. All this comes as financial markets surge. The share market is at 9-month highs, with riskier stocks rallying. The Aussie dollar is strengthening against the greenback. Commodity prices are up. What can go wrong? Plenty. We don't actually have a vaccine that can be rolled out yet. The enthusiasm in the share market may well be ahead of itself. There are still huge numbers of COVID-19 cases being reported every day across the Northern Hemisphere. Unemployment in Australia remains a problem. With deference to Charles Dickens, it's the best of times and it's the worst of times. It's an age of wisdom and an age of foolishness. The motto of the story, investors beware. In overseas news, US stocks pulled back overnight after figures showed that applications for unemployment benefits jumped again last week. There are now more than 20 million Americans receiving jobless benefits of some type. Chinese President Xi Jinping has finally congratulated the US President-elect Joe Biden for his election victory and said he hoped for a win-win cooperation between the two countries. An electric car maker Tesla is due to hit the S&P 500 next month, and its share price just keeps rising as index funds are forced to buy the stock. Index funds mirror the market, so hold positions in pretty much all stocks. Tesla is now worth over $500 billion, up 600% this year. That makes it a top 10 stock on Wall Street. Locally, the rally in the Australian share market continued yesterday, with the S&P ASX 200 breaking through the 6,700 point mark before falling back to eventually close at 6,683 points, up 0.6% for the day. Since its bottom on March 23 this year, the index is up 48%. It is now on par with where it started 2020. Commonwealth Bank gained 1.5% and triggered a changing of the guard, so to speak. Australia's biggest bank now has a market capitalisation of $147.1 billion, $5 billion more than CSL. The healthcare group's share price fell 2.5% yesterday. The largest company, Baton, has been passed back to Commonwealth Bank. Tasmania will open its border to Victoria from tomorrow after 8 months of restrictions. Queensland Premier Anastasia Palaszczuk said her border with Victoria would now reopen on 1 December. Ms Palaszczuk said the biggest risk now were international arrivals, particularly given the surge in Northern Hemisphere cases. Meanwhile, independent modelling shows that coronavirus payments, including JobKeeper and JobSeeker, helped almost 500,000 families avoid losing their homes this year. It's been a while, but there's some good news out of the relationship between China and Australia, with Beijing acknowledging Prime Minister Scott Morrison's positive comments about China, its global influence on growth, and its poverty alleviation efforts. That's a change in tone from pretty much everything else that's been said during the past 6 months, and good news for Australian exporters. Harvey Norman reported a 160% jump in pre-tax profit for the 4 months to the end of October. The group's chair, Gerry Harvey, not known for understatement, said the boom on spending in homewares and furniture could go on for years. Modern slavery is a term getting increasing oxygen. Very broadly, it's about ensuring companies don't use child or underpaid labour to produce goods and services. Charity Oxfam yesterday released a report into the purchasing practices of 10 major retailers, which was critical of the transparency of some groups, particularly Myer, Premier Investments and Mosaic Brands. It said they hid supplier factory names and locations and refused to make a credible public statement to pay living wages. That's a tarnish no retailer wants. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Jonathan Armitage from MLC Asset Management about investing in a Joe Biden world. I'm Sean Aylmer. Enjoy your day.